Yo, what's up, everybody? It's Monday. Back to Monday, August 1st. When it's August, I get a little melancholy because to me, that's kind of like winding down the summer. And I love the summer. July is like the high point of the summer. June is fantastic. July is the high point. Then we get into August. It already feels like, winding down the summer. When my kids were younger, it was really much more impactful because, you get all the back to school shopping and all that stuff that has to happen. But now they're all grown up. So I'm not on that time cycle anymore, but it still hits me psychologically. Anyway, let's talk about the markets today. I was kind of surprised today it was a quiet day. We were down a little bit in the averages. And today, being August 1st, that was the first of the month. That's the big government disbursement day. That's last month on the 1st. We had 120 billion in leading spending flows. And it's usually, right around 100 billion, 110 billion with a net somewhere around 90 something billion. So today was a big day. Money flowing into deposits, into bank accounts, and usually you see a reaction from that. But I suspect that tomorrow we're going to be up strong. Sometimes there is a 1 or 2 day lag. I've seen that happen many times before, especially I've seen it with Social Security payments. So I'm pretty sure tomorrow we'll be up. And honestly, I like the kind of the hesitation. You don't want this thing to run up too fast. I mean, July was the best month since 2020. And I talked a lot in the prior videos now about, the monetarists, how they're just, they are beside themselves because it's like, why is the market going up? Why are bond yields coming down? It must be that the Fed has pivoted. Pivot. That's the word. It's trending even on Twitter. Pivot. I don't see any evidence of pivot coming out of the Fed. I don't see it in their comments. I don't see it in their rhetoric. As a matter of fact, what was his name? Dudley. Was it Bill Dudley, former New York Fed president? He made some comments today. I was really very much on the hawkish side, and I looked. Again, Fed Fund futures, look, they're pricing in a 50 basis point hike in September. They're pricing in a 25 basis point hike in November, and they're pricing in a 25 basis point hike in December. And that was exactly what the expectation was a month ago. So, this whole chatter about pivot, I think it's really the monetarists just trying to rationalize what's happening within their framework, which is monetarism. And that's the only thing they understand. Then they have to see everything within the context of that framework, within the context of monetarism. For them, it can only be explained through monetarism. They don't care, or they don't pay attention to the fact, for example, in the last 2 months, system reserves have increased by 350 billion. I spoke about that. I think I mentioned that on Friday. Now, 350 billion. Imagine if Congress said, 2 months ago, they were going to send out 350 billion in checks. There would be a very positive, bullish response in the market and in the economy. Now, that has happened. They didn't send out the checks, but system reserves, that's cash in the banking system, up by 350 billion. Some of that money gets rolled into treasuries. That's what's causing the rally in the bond market. The Fed has not pivoted, and that's what's causing the rally in the stock market. So, but you're not going to hear anything about that because that has nothing to do with monetary policy. They're not interested in that. They're not even aware of it. They're not even they can't connect the dots on that. Everything has to be explained in the context of monetary policy. And so, but here's the thing, and I said this today, if they say it loud enough, and if they say it long enough, and I'm talking about, the Fed just pivoted. The Fed pivot. If they say pivot enough and loud enough and in public, then given the history of Jerome Powell, that's probably what he's going to do. I mean, this guy is very, very predictable. In the wrong way. As far as I'm concerned, it's in the wrong way. You don't want an independent central bank, which is a monopolist price setter. You don't want that institution to be at the whim of, market participants, because then it's market participants setting policy. And I've shown you so many times how, they just have a completely flawed or backward understanding of the economy, of the monetary system, of how things work. And so you don't want them setting policy. They have the wrong understanding. But unfortunately, that's the way it is. I mean, think about it. It would be like John D. Rockefeller, the great oil monopolist, of the 20th century, the 19th and the 20th century, if he were to go out and ask or listen to the chatter of all his small little measly little competitors out there, oil drillers operating one or two or a couple of rigs. Hey, what price should I set my oil at? Rockefeller didn't do that. I mean, he never would have done that. He crushed those guys. He put them out of business. But Jerome Powell is very predictable. It goes all the way back to when was he appointed? In 2018. Very predictable. And so, yeah, if they say it loud enough, if they say it in public, and if they repeat it over and over again, he may very well pivot. And that would, I guess the end justifies the means. I mean, it would be like, then you see a really, really big extended bond rally based on a shift in the Fed's position. But again, I want to tell you that right now, there is no sign of a pivot that I can see anyway, either in the Fed's comments or in the market pricing. No sign of a pivot. All right, so it's August, and remember, here's another thing I want to talk about. Now, I've been seeing lately a lot of economists now coming out and talking about how the deficit has been reduced. Folks, these are all things I told you 6 months ago. I mean, I was talking about the deficit contracting back in January. It's been a constant theme of mine. And so it just goes to show you once again that the stuff you get here from me, I mean, it's 3 to 6 months ahead of what mainstream Wall Street or the economics community, profession, whatever you want to call it, gives you. I mean, you get all this stuff here first. The irony is, I got to say this, that now when they're all talking about the deficit, shrinking, it's actually going back up again. Not a lot, but it has reversed course, and it is going back up again. The worst point in the deficit was right after, it was like early May, right after that April tax collection, the April tax drain. I've been talking about that for months, the $324 billion. And the deficit went all the way down. It was like 500 something billion. Now it's up, almost back up to 900 billion now. But that's still, 1.5 trillion below where it was last year. But the point I'm making is that now I'm telling you guys this, okay? And you're not going to hear about this for another, 3 months at least. Then they'll say, oh, the deficit's starting to go back up again. So again, you're hearing all this stuff first from me. All right, let's get focused back again on, I want to talk about August, because something I have been telling you now for a long time, a few months, is that August is going to be a big, positive, bullish month, because We're going to have a very strong fiscal. There's a quarterly interest payment. That's about $45 billion. That's going to add on to the regular monthly leading spending flows. July finished off with 170, it was like what, 176 billion deficit. That was the biggest deficit since March. The problem is the leading spending flows in the leading spending flows for July, it came in at a measly 494 billion. That was the smallest of the fiscal year so far. So we go all the way back to October 2021. That's 9 months. That has been the smallest leading flow. Now you might say, Mike, isn't that a bad thing? I mean, that's really bad. Spending is slowing down. Right now, I'm looking at the net spending, which is spending minus taxation. And luckily, I have to say, it would be a really bad thing. But the good thing is that tax flows are slowing down. So the net is getting bigger, And so August is going to be big. After that, we run into some trouble in mid-September. There's a quarterly corporate tax payment. And, you really don't want to have big fiscal drains right now when spending is really slowing down. But we got another good month coming. So, and by the time September rolls around, we'll be able to strategize. I say make the most out of August because, this could be the best month of the year. I'm pretty sure. And then we'll see what's going to happen. Then we roll into the midterm elections, all that stuff. It's going to get wild, folks. It's going to get wild. Hey, that's it for today, everybody. Don't forget, today's Monday. I sent out a new edition of MMT Trader. If you want to copy that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Or send me an email at mnorman@pitbulleconomics.com. See everybody tomorrow. Bye.